Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, June the 21st. My name is Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get this on. Not a whole lot of economic data across the pond. Here in the United States, we did get existing home sales came in at 562 million units, expected to be 554 million units. So that number being better shows that people are moving existing homes. Then we also had the crude oil inventories number came in at a drawdown of 2.5 million barrels, expected to be a drawdown of 1.2 million barrels, so a bigger drawdown than expected, and we would expect that to give a little bit of buoyancy to crude oil. Not the case. Once we broke below that fib level, actually it was showing support on this line that I showed you right there at that $43 a barrel mark. That acted as support, but when this economic data point coming out, making you think that it might get a little bit of bounce off of there, it accelerated to the downside. So crude oil now down below the fib level, and looking, I drew this little line in here, little trend line if you will, touching the last couple of bottoms, and it literally looks like it could go down here and touch it, and it, you know, maybe even when it coincides with the 52-week low of $39 a barrel. So crude oil having this crossover, very bearish. As you can see, we have lower highs and lower lows now, and another lower low if you will. Could possibly see a dead cat bounce here again, but at this point we are seeing a very bearish trend in crude oil. So keep those lines in the sand on your marker, $39 a barrel, and you know, this is going to trend down as we go. So following that line there, we are right here at a bit of a support. As you can see, it kind of coincides with the mark over here in what is that, November. So these are the Nov lows, so we'll have to keep an eye on that because that should act as support as well. So Nov 16, let's look at that again, the November 14 low. All right, so write those down and keep those in mind because we are very close to that. Breaking through that would be a point of contention to go down and touch this trend line. Then on to gold futures. Gold futures bouncing off the 200-day moving average. We've got a real mixed bag in the equities, which is kind of giving a little bit of support to gold futures. Plus, we are very close to this value area, which is the point of control where the most time and volume has been spent. This market does have higher highs and higher lows. So if it can bottom out here, one would expect that it would go up and possibly test or make a newer high. And you know, some chartists might contemplate whether or not that is a tweezer top as well. So and creating somewhat of a head and shoulders. Yeah, I have to check and see what I got there. All right, so on to the bonds. Bonds again pushing higher. Bizarro world to me. The Fed governor speaking yesterday did not seem like they were being very dovish or hawkish for that matter, just kind of the same old, but the bonds are pushing higher based on the rhetoric we're hearing out of those FOMC members. So bonds could continue to try and push higher despite the fact that they're talking like they're going to continue interest rate increases. Then we've got the Dow Jones Industrial Average off by 50 some odd points right now. You know, they're coming off. They're the ones that are bucking the trend as people are really throwing their money into the FANGs or into the NASDAQ, the tech area. So we're seeing a little bit of pullback from blue chips into the techs. One caveat with this, which is kind of funny, is Gartman just said that he is full on bearish right now, so we could see new historical highs going across the board, just as a contrarian to what he has been doing. Anyway, NASDAQ up about 32 points, and again, E-mini S&Ps off a little bit, just by about 7 points, we'll call it. But the E-mini S&Ps getting below that 9-day moving average, which could signal some more bearishness if we settle down there. So keep that in mind, as well as we could still continue to see more of a sector rotation into tech. E-mini S&P on a daily chart, pretty quiet day for the most part. Economic data, we rallied, made the highs, and now have since kind of really lost its luster, heading to the lows of the day, maybe just to try and print those lows in the day session. Now we saw with crude oil coming off, despite the fact that we saw more of a drawdown than what was expected. XOP, which is the oil and gas exploration ETF, XOP, breaking down below. Now yesterday, I was talking about this doji down here, making it look like it was a bit of a support level. I was trying to get out of my XOP yesterday, wasn't able to. Put it in today, right on the open, knowing we were going to have that data point on crude oil. And when I saw the crude oil number being somewhat bullish for crude oil and possibly XOP as well, I'd left that in there, ended up getting out. Got hit on that order I had on the July 33 calls that I was short, and I originally sold those for 56 cents, bought them back today for 28 cents. And that was just an existing working order. It's a little bit lower now than where it was before, so probably get out a little bit better than what I was, but trading right there at $30 on the nose, basically 1 penny off of it, could very well be a line in the sand to act as support, but looking very bearish. This even looks more bearish than the crude oil chart, actually. So a lot of people are calling for much lower oil going forward. There's still a glut of oil out there too, so despite the fact that we're having maybe 1 million barrels of oil draw down more than expected, that's not necessarily enough to start clearing out any of that inventory we're seeing. Now with Walmart's another trade that I took off. Remember, I was working this yesterday as well. I have on 2 trades in here in Walmart. One of them I talked about, went into longer duration, and then when I realized it on Monday, went into the shorter duration to just kind of add to that trade. So in the one I took off was the nearer duration, and I took off the July 73 puts that I originally sold for 64 cents, bought them back for 32 cents. So Walmart getting a nice bounce. Remember, this big drop was on nothing but Amazon talking about buying out Whole Foods. Now Whole Foods trading higher than where Amazon said they were going to buy them out, because there's rumors that somebody else might buy them out. Maybe it's Walmart, maybe it's going to be Target, it could be Costco or somebody like that wants to get into not only that bulk selling, but some of the retail stuff there too. So Walmart bouncing back after that big drop against the news that Amazon was buying out Whole Foods, which could possibly hurt Walmart, but Walmart's in a different category altogether. And then ConocoPhillips. Now this is one that I'm actually looking to get into because I'm bearish the overall oil and gas area. Got out of my XOP, yes, but took my profits on that. Now looking to add a little bit of risk with ConocoPhillips, and I'm looking at the July 47.43 put spread in there. So trying to pay less than $2 because it's a $4 wide spread. Just not happening as this market kind of continues to sell off. It's really kind of getting away from me. So don't know if I'm even going to leave that in there much longer. Now Starbucks got a big candle here where it's an engulfing pattern. We've got the 9-day crossing over the 50-day. Looks like we really could want to come down here and go back to the value area. As you can see, we've spent a lot of time above this value area high here, and it just has not created much volume, which means price is not being accepted up at these levels, which means consumers, retailers, or the retail sector, or the investment bankers and things of that nature aren't really buying into Starbucks at these levels. So the market has a tendency to draw back down to where the most time and volume's been spent, which indicates value. So I think that we're going to see Starbucks continue to cruise down here and test this $57.50 area. So in that, I decided to go in there in the August, a little bit longer duration, and bought the 62.5 puts, sold the 57.5 puts in there, and paid a debit of $2.46 for that. So less than 50% the width of those strikes. That's the trade that I just got while we were on this. Daily market commentary was working that trade and just got hit, and that's what the ringing bell was. So the cha-ching, if you will. So looking for Starbucks to trade down to that point of control, and then that would be a nice full winner on that. So hopefully we can get Starbucks to break down below this. I do believe that we are going to see some support here where it was a top before. I think we'll see a little bit of support here, but we'll hopefully get down there at least by August, if not sooner, because I'm going to be looking to get out of 50% of my max profit there. The other trade that I'm looking to get out of is Target. It was looking a little bit better this morning and even better yesterday. I was about a nickel away yesterday, but the market has sold off both days. Now, I'm expecting Target to rebound, even though a lot of people are saying Target isn't in as good of a position to compete with Amazon and Whole Foods versus Walmart having a better presence online. I think that Target's still going to have a bounce, just like Walmart. I think Walmart might even pull up Target in that regard. So looking to try and get out of Target, but I'm not going to be super aggressive with that. And I have on the July 48 puts that I originally sold for I think it was about 56 cents as well, but trying to get out for 25 cents right now. It's trading around 33-ish with the market right here. So that's about all I got going on right now. Looking to add a couple of other things, but haven't found anything that's really, sticking out at me. I've covered some long deltas here. Added a little bit of short deltas with that Starbucks trade, so I might be looking to add some more long deltas. One of them that I'm looking to do, it's just not working out with any of the spreads that I'm looking at, is FedEx. Massive bounce here. They crushed it on earnings. The calls in there just aren't allowing me to get a call spread. I looked at doing a risk reversal as well. Just wasn't setting up along the lines of my rules, which you can find out at Pro Trader Strategy, how to set yourself up for success with that. I'm having to pay more than 50% the width of my strikes in the call spread, so I'm not going to do that, especially with this big of a move. Maybe wait for a little bit of a pullback and I'll be able to be accommodative with that. So looking at a lot of different things. Friday's webinar is going to be on the poor man's covered call, so I might even look at doing a poor man's covered call in FedEx, although I don't really like doing that at historical highs necessarily. So but anyway, we're looking at poor man's covered call. Nice way to save on your outlay of money, whether you were to go out and buy a stock. This is going to be a way to set it up where you'll have a synthetic put in there, sell it like just a covered call spread, and limit most of your risk and use much less margin to implement this strategy than it would be to go out and just buy this underlying. All right, so that's all I got for you guys today. If you can't take that, take it easy.